This YouTuber says this one candle can change your life and gives us a stupid simple strategy to follow. But can it pass a prop firm challenge? Let's find out. My name is Eddy Pips and I'm on a mission to test trading strategies to see if they truly stand up to the prop firm challenge. Before we get started, if you have a strategy in mind, drop it in the comments. I'll try to test it. Let me break down how this works. I find a trading strategy, I pick a random month, I backtest it trade by trade using FXReplay. We track wins, losses, drawdown, and whether it hits the prop firm's rules. Some strategies will pass the prop firm challenge in a few days, and some might fail in less than a week. We try to test a whole month or more until either profit target is hit or drawdown is. Now let's find out if this one candle can change our lives. Let's dive right in. As always, I'll leave the link to the original video in the description. All right, the rules are simple. Rule number one is on the 1 hour chart, we're marking out the high and low of the 8 a.m. candle. So at 9 a.m. when we come to the chart, we're waiting on the 1 hour time frame for the 8 a.m. candle to close. Once it has closed, we are going to mark the high and we are going to mark the low. We are going to be using these levels as liquidity, and we are going to be waiting for one of these to be swept before we look for an entry. So the 1 hour is for context. Now we drop down to the 1 minute time frame and we wait for one of these levels to be taken, either the high or the low. Now, the kicker with this is that we are only able to trade after 9:30 a.m. So go ahead and put a vertical line here at 9:30 a.m. right here. And this is, of course, UTC -4 New York time. So we are waiting for that liquidity sweep to happen after 9:30 a.m. Now, there is a chance that the liquidity sweep might happen before 9:30 a.m. But since our entry isn't until after 9:30 a.m., we'll talk about that bridge when we cross it. So, again, 8 a.m. candle, high and the low. We are waiting for it to be swept after 9:30 a.m. So let's go ahead and see what happens. All right, so now that rule number two has met, on the 1 minute time frame, wait for a high or low to be swept. We are going into rule number three. After 9:30 a.m., wait for a market structure shift and a close back inside the range. So a market structure shift, we are going to mark out our most recent high and we are going to wait for price to close above that. That is inside of our range, but essentially what he means by closing back inside the range is right now we're looking at a bullish scenario. This is our low. Price must come in and close above that low. We cannot have the market shift happen down here. We cannot have the market shift happen down here and enter. It has to have been closed back inside of the range, if that makes sense. Okay, so let's wait for our market structure shift. All right, we have our market structure shift. As you can see here, this is our most recent high that took out the low, and we have price close back above that high. Now, rule number four is enter on any PD array. That could be a breaker, an order block, an FVG. So we have, for example, let's mark out each of these. Let's see what we have here. So we have our breaker block right here. We could enter off of that. We have our fair value gap right here. We could enter off of that. And this is the last series of down closed candles before liquidity was taken. So we have our order block there as well. So we could essentially enter off of any of these. Now, the fair value gap would definitely give us the best risk to reward ratio. But what I really like is the fact that we have this breaker block right here, which is the last series of up close candles before the liquidity sweep, before the breaker structure in the opposite direction. We also have this order block here and this fair value gap inside of this order block, and that lines up with this breaker block, which gives us the unicorn model. So we're going to go ahead and we're actually going to enter off of that breaker block / order block right here. Our stop loss is going to go just below that low here because it shouldn't want to come back down here because we do not have any fair value gaps here. We do have this inverted fair value gap here, which gives me even more confirmation that it shouldn't want to come back down here, but we are going to target 2R. Now, what we are going to do is right at this 8 a.m. candle high is we are going to move our stop loss to break even. And we are also going to take 40 to 50% off of the position. but we are going to take 50%. I really don't want to do this. I just want to set it to break even, but I want to follow every one of the rules. But again, we are entering here because we have that breaker block lined up with that fair value gap and this order block as well, which is a last series of down close candles that swept liquidity before the breaker structure to the upside. We are going to wait until we hit the top of the 8 a.m. candle, and we are going to move our stop loss to break even and continue to target 2R. Let's see how this plays out. As you can see, we tap right into it and we start reacting immediately. So here you can see So here you can actually see that we hit the top of the 8 a.m. candle. So we're going to go ahead and move our stop loss to break even, and we're taking 50% off of the trade right here. And we are going to continue to let it play out until it hits 2RR. So in this case scenario, it actually took us out at break even, but we did take those 50% off once it hit that top of the 8 a.m. candle. So let's go ahead and look at another example. All right, I had to go all the way back to August 14th for a winning sell example. Don't know if that's a bad thing, but first things first, mark high and low of the 8 a.m. candle. We have our high right here of the 8 a.m. candle. We have our low of the 8 a.m. candle. Rule number 2, on the 1 minute time frame, wait for the high or low to be swept. We have our high being swept right here. Rule number 3, after 9:30 a.m., wait for a market structure shift and a close back inside the range. We are after 9:30. It is 10:31 New York time right here when the sweep happens. We are waiting for that market structure shift and that close back inside the range. So let's see if we get that market structure shift. Our closest and most recent low is right here. We're going to wait for price to close back below. Let's see. All right, so we just had a break of this high. So we actually have a new low that we are waiting to be taken out. All right, we did have another break of structure to the upside. So this became our new low. And as you can see here, we had price close below it. But yes, price has closed below it. But if you look at the rest of rule number 3, it needs to close back inside of the range, which it has not done yet. Now we have a close back inside of the 8 a.m. candle range. So now what we are doing is we are looking for a PD array to enter off of. First things first, we have our breaker block. And our breaker block also contains a fair value gap inside of it. So we're going to go ahead and we're going to enter off of that breaker block. Stop loss above the high. Target 1 to 2R. Now, if I'm not mistaken, in the video, he also says that you target 2RR and then you take partials. You put your stop loss at break even and then continue to target the rest of the 8 a.m. candle range. All right, so we're going to do that here. So first things first, we're going to wait for our entry. Another thing that I noticed is that he did not tell us what time to trade. So I'm going to safely assume that this could go on until I would say about, I wouldn't go past 3 p.m. But we're going to go ahead and see. Price actually fills this fair value gap and completely runs away. But you can see price is pulling back up. We have now entered just before 1 p.m. And price has not entered us in yet. And you can see price has now entered us in. We're going to wait till we hit 2RR. Here we have 2RR. We're going to move our stop loss to break even and continue targeting the end of the range. We are going to close our position out completely at 3 p.m. because that is when volume dies out completely. Like I said in the video, I don't think he gave us times to trade. So you can see here it is now 3 p.m. and price did not hit the bottom of it. We took partials out. We're closing the rest of the position here, but this is a valid example. And our last example, as I stated earlier, if the liquidity sweep happens of the 8 a.m. to 9 a.m. candle, if that happens before 9:30 a.m., what do we do? First things first, let's mark the high and the low of the 8 a.m. candle. Then on the 1 minute time frame, we wait for one of these areas to be swept. It is not 9:30. You can see here at 9:12, we had liquidity swept. Now, what we are doing is we are waiting at 9:30. We are waiting for another liquidity sweep. So let's just go ahead and fast forward over to 9:30 a.m. And as you can see here, we have hit 9:30 a.m. and we have, let's go over to the next candle to see if that is a valid high created. It is not. Waiting for a valid high to be created. And here you can see we have a valid high created. Now, what we are doing is we are waiting for this high to be swept before we look for that market structure shift. And as you can see here, we have that high that was created swept. We are waiting for a break of market structure right below this low and a close back inside of this range. All right, so we have the market structure shift and we have the close back inside of the range. Now, what do we have here? We have a fair value gap that we can trade off of. Now, what we have here is that fair value gap, stop loss above the high, and we are going to target 2RR. And we are going to move our stop loss to break even once the low of the 8 a.m. candle is hit. All right, low of the 8 a.m. candle was hit, and we are going to move our stop loss to break even and see how the rest plays out. And you can see here, the 2RR was hit. So those are it for the examples. We're going to jump into FXReplay and start the back test. Here we are on FXReplay. We're going to hit new session here. We're going to name the session Faiz 8 a.m. candle. The account balance is going to start at 25,000. The asset that we are trading is MNQ. He states that it works on MNQ and only MNQ. I saw that he had backtested results already posted, and I want to try to see if we can match that. So I'm going to go ahead and select January through February here, and we're going to hit create session. And here we are on Edge Finder. We're going to hit new challenge. We're going to hit two-step challenge. We are going to select FTMO. Asset market is NQ. Strategy name is Faiz SMC 8 a.m. candle. The rules are automatically populated here. Here you can actually see if you were to, for example, select Blue Guardian, the profit target would switch. But most people do use FTMO and funded next here, which of course is auto-populated as well. We're going to stick with FTMO here, and we're going to hit start challenge. All right, looks like with this trade here about, I want to say 3 months later, passes step 1. Let's engage in step 2. All right, guys, the back test is finished. Did this pass the FTMO prop firm challenge? The first phase, yes, and it did not finish out the second one. As you can see, guys, I back tested all the way back from January all the way up to August. And as you can see here, the performance by month made 2%, just below 2%, 3% in March, lost 1% in April, lost 4% in May, June, July, August, so on and so forth. This strategy, you can see the equity curve here, and over here on Edge Finder, you can see that it had a lot of good upside, and then we just lost everything in April. Just everything in April, we just lost it. And then we started slowly climbing back up. Lots of ups and downs. Now, my thoughts about this strategy. It's a little weird. There are some things that weren't mentioned in the video that I wish were. There are some things that I would have changed and some things that I found out while backtesting this strategy. Another thing was the risk to reward ratio. I didn't really like the fact that you had to target 2RR, move your stop loss to break even, take 50% off of the trade. It seemed like a lot of work to basically get an average RR of 1.6. And a lot of the trades that I tested, it would have just been easier if you just went straight for 1.6. There were some opportunities to get more than 2RR. Unfortunately, there weren't very many of them, probably not even a handful. But yeah, guys, personally, I will now begin. So some things about this that I've learned. One is I will actually start using the 8 a.m. to 9 a.m. candle high and low as trading levels in my trading from now on. That is one takeaway that I got from this strategy. The 8 a.m. to 9 a.m. level seemed to either be taken out and move in the opposite direction, or if price broke above it, it came back down for support and then continued off of that level as well. it seemed like an important level, but unfortunately it just wasn't enough to pass both phases of the FTMO challenge. Was it a bust? No. But I personally would stay away from this strategy. It is not for the faint of heart. As you can see, you would have passed Apex, maybe gotten a payout here, and then you would have lost your account here in April and March. Then after that, you would have passed again. You would have probably gotten a payout. And then through August, you would have gotten some nice payouts. But unfortunately for FTMO, this passed the first phase. It did not pass the second one. I would personally not trade this. I will not be trading it. And unfortunately, I can't advise anybody to trade it because of the backtesting results that I got and how it was during the backtesting session. Would I stay away from it? Personally, me, yes. Should you stay away from it? I mean, the equity curve, you can take a look at the equity curve. It was a win rate of 44%. Unfortunately, that's not completely accurate considering the fact that we had to take partials and move our stop loss to break even. But yeah, guys, I'll let you decide, but max drawdown was 9%. Max drawdown was almost 10%. Anything above 5 or 6%, I typically advise anybody to stay away from. But I'll let you make that decision. Did it pass the prop firm? It did not pass FTMO. It may have passed the 5%ers at an 8% for the first target, 5% for the second, and it would have passed Apex, which is a static 6% one phase, but it did not pass FTMO, and I personally did not like it. Stay tuned for the next one.